What's up, everybody? Hey, Donna, how are you? Adnan's here, Carmine's here, Tyler, Aaron, Jeff, and Brian. Nice to see everybody. So, look, we're on Facebook Live. This is Chris Pulver here with Market Traders Institute. This is an Ask an Analyst segment. What we are going to be doing is talking markets, financial markets. I have a handful of questions I want to address today. This is going to be a segment you're going to start seeing on the regular here at Market Traders. Usually, we're going to at least shoot for every week. I'm doing this week, and next week will be Gary Fickhart. The week after that will be Tyson Clayton, and we're planning on rotating. We'll probably do some tandem ones as well, but we want this to be a time, it's just more informal. Obviously, I'm here in my office, comfortably working, but the goal is to address some questions out there. I've got a handful, like I said, they're already kind of prepared that were submitted on Facebook. So, yeah, that's what it is. Ask an analyst, right? So if you want a certain instrument analyzed or just some thoughts on the markets, or you want to ask me a question about other stuff that's not trading related, that is fine. But I'm going to be with you all live today for probably 15, 20 minutes. Have some fun. Keep it fun. Keep it informal. And if you can see, the stream right now should be my screen, or just my face, which I'm going to get rid of that. So let's do a split where you can see my screen. I've got the dollar index up, and I'm going to be parked in the lower right-hand corner. So a couple of questions that came in that I'd like to address right away. And again, I want to thank everyone that did post those questions earlier leading up to this week. A couple of questions that came in here. Let's see here. How do you control equity management if you trade without stops? That's a fantastic question. I'll address that. So again, the question is, how do you control equity management if you trade without stops? Mic down. If you trade without stops. And here, it's a really simple answer. It's trade size. Okay, and there's two ways to address this. In fact, I just got out of a meeting. Okay, so question is how, if you can see this, I'm typing on my screen here, how do you manage drawdown, okay, without using stops? Okay, now I'm going to say my answer is trade size, and I will explain. So let me get this one out of the way here. I guess I'll type that again. There we go. Okay. So drawdown without using stops. Let's type that again. And answer would be trade size. Now, I just got out of a meeting where I was actually reviewing several systems where, I've been a lot of traders that, have small accounts. And this is why I think the trade size is important. If I'm going to manage a trade, if I'm going to manage a drawdown, I want to have really conservative trade sizes. Okay, really conservative trade sizes. And what that means is if I have, my rule of thumb is going to be something like $1,000 will be roughly a micro lot. For every $1,000 you have a micro lot of trading, which is 0.01 lot sizes. Now, I would prefer that if I have $3,000 to $4,000, $5,000, I can still trade that micro lot, and that reduces my overall risk a ton, because as far as my risk percent, I have a lot more freedom to let trades run or let trades, go up and down and oscillate in the market while I build positions at certain areas. So as an example, I'll use this chart that I have up, which is the dollar index. Let's just say this is any financial instrument, okay? This is any instrument. So if you were for example, if you're holding the dollar short right now, if you're trying to sell the dollar index, okay, or trying to sell any instrument, and let's say this is why, you believe that you're looking to sell, hopefully you can see me drawing on this, but if we have, resistance right here and you're looking for a sell opportunity, if you have a small trade size, look, you can take a sell trade right there. You can take a sell trade right there, and rather than having to say, okay, I can only let this go X amount of points against me. I can only let this go X amount of ticks against me. I can only let this go X amount of pips against me. What you can do is you can take this trade and you can look and see where the stop loss should go, above this high or out of the way. And you could take trade 1 here, and you can wait for a possible retest of the backside of this trend line, trade 2. If it comes back up to this high, And we still have the sellers that are going to take this market lower, which in this case, in this instrument, I think it will. But, now is not the time to see confirmation for shorts, but it's a good position to be getting into. If this is a sell trade and I want to sell it higher with a second trade and higher with a third trade, okay? Rather than saying this trade needs X amount of dollars at risk or X amount of percent at risk, instead, I just take a really, really small trade. And this can go against me. I know that I'm wrong up here, so I still have an exit plan. So let's make sure, let's not confuse the fact that even though I'm saying I'm not explicitly trading with stops, and this is not for all setups, but for certain setups, I'm not trading with stops, but I'm trading with extra small trade sizes, so it gives me the flexibility to let my trades run. So this could be, I can take a position. I can take a position to sell here, a position to sell here, and a position to sell here. And if I can do that, probability-wise, the market should cooperate technically and go our way. And that way I don't have to be as precise and exact on managing exactly my entry and my stop and my profit. Because if I'm going after a bigger chunk or a bigger move and it's going to take a lot more time, I might have to sit in that trade for a while. So again, the question was, how do you manage drawdowns, okay, without using stops? And my answer is take very small, very conservative trade sizes. Okay, when I'm looking at risk, I'm looking at trade sizes that are almost insignificant, where I can take something that would be a fraction of 1%. So I could be in a trade and sit on a trade, and it's a fraction of 1%, that's the drawdown. I can take another trade, that's a fraction of 1%, that's a drawdown, and I can let this position work, where maybe I collectively take about a 1% risk, 1.5% risk. Now it's fluctuating, but about a 1.5% risk. And from there, the tide starts to turn, the confirmation starts to sink in, and the trade starts going your way. Well, if you know that your worst case scenario was about 1 to 1.5% risk, now you can look at what the reward factor is. So if I'm into my profits for 1.5 to 2%, 2.5%, 3%, I'm holding on to these trades, again, it's kind of a more, to me, it's like, it's a more Bruce Lee type way of letting, risk reward go in your favor, but also giving yourself the flexibility and time to let a trade work. I think one thing that is extremely difficult for retail traders is to be right on every entry, to be so precise on every trade that you put a stop and a limit and you're never taken out. The market is volatile. The market will spike. The market will test highs and lows. The market likes to go at levels that you probably should, and most traders do put stop losses. So knowing that, I tend to trade a little bit smaller so I can just be flexible. So it's a great question, and it's a really important question for traders of all different account sizes, but I hope that makes sense. I'm taking small conservative trades in order for me to have the freedom and flexibility to work through them. Okay, so I think that's a great question. I had one more that came up earlier as well that I want to address, and then I'll get into, I've got a question that came in on gold and silver. We can talk about that. Look, I finished my trading room this morning. We ran a trading room from 8 a.m. to 10 a.m. It's my flex trading room that I do Tuesdays, Wednesday, Thursday. We have a bonus session tomorrow for non-farm payroll. We've had a great week. We've had traders closing up this week for anywhere from 300 to 500 to over 1,000 pips. I think Tony, our man, so far this week up like 1,700 pips. So we are super active in the group. We're super active in the trade room. And so far, so good. I mean, the year's going pretty well, and we've got a ton of big trades ahead. So really happy about that. This is another question that came in. What's the best way to log your trades so you can keep track of your progress? The best way to log a trade, in my opinion, is to let your computer do it for you. Okay, so if you go to, this is a website that everybody can jump onto. It's a third-party verified website, myfxbook.com. It just takes an account. I mean, you can type in your email, password. You can search all these crazy accounts. You can search all these robots out there in the trading world, whether they're MetaTrader 4 or link to broker accounts. But this gives you metrics to trade. Okay, so you can look at. Let me see if I have. Let me go in. Let me sign in. I don't really remember my password, but let's find out. Let me see if I remember my password. If I don't, then we'll find some other way. Okay, good. So I have. Let me check a couple of things. So this is an example. All right, this is one of my live accounts. Let me see here. I've got some more track record and history on one of these. Let me just find it really quickly. Let's try this one. There we go. So just something like this where the computer does the work, right? All I'm doing is I'm connecting my account. Okay, I'm connecting my account, and what you're noticing is this is my profit and loss. This is my equity curve. So, my red line, this is where my profit is at, and I'm getting nice injections of profit over time. I'm growing my account over time. The yellow is actually my available equity. So this is an unrealized drawdown, but it closes with profit. And again, unrealized drawdown closing with profit. So the account continues to grow, pip-wise and money-wise and, open positions. I mean, look, if you want to see your metrics, then look at this little summary. Advanced statistics, you're looking at the total number of trades, the probability of the profitability, how many pips you've captured, the average win versus average loss, how many longs and shorts you've won. So, I mean, for this particular account of mine, I mean, I've had a pretty good run. Pip-wise, almost 16,000 pips. Average win is about 3 times bigger than the average loss. Win percentage, I mean, shorts and longs, it looks like I tend to favor buy positions. So, I mean, I have 177 trades. 83% win, or only 57 trades, 82% for either buying or selling. Best trade is $713. Worst trade's 303. So I like the fact that I'm looking at this, evaluating my trades. I make more money in my average win. I make more money with my biggest wins. My best trade versus worst trade. Again, you notice that my risk reward is in my favor, right? I'm making more money than I'm losing. So the profit factor, the probability of me being profitable is quite high. And I mean, again, you think about the numbers in trading, that's really all it is. Just you're trading to be profitable, period. And the more consistent you can be, I would say for, a little word of advice out there, the more patient you can be, the more you let trades come to you, the better off you are. Okay, but that's a great question, and MyFXBook is a very easy way to let your computer do all the metrics for you because it's connected directly to your broker account. You can do it the longhand way, and you can have a trading journal, and you can write in, which I'll go, I'm trying to think 11, 12 years ago when I first started trading, my first trading journal was a lot of trade results like +1, +20, -20, +1, +10, +20, and then it started to be a lot of self-talk. Don't do this. Don't do all. It became like a diary. I kind of got away from that because it almost became toxic for me to have some really negative self-talk when I would make a mistake, and then I wouldn't really. I mean, I expected to win. I expected to be a profitable trader. So when I was noticing as I'm going through my journal, it's like a lot of it's like when I'm frustrated and I'm not trading well. That's where I tend to be the most vocal. Now the good thing is we are trying to learn from our mistakes to prevent them from happening again. But the reality is I just need to embrace a strategy, embrace a system, and trade. So I got away from, kind of the detrimental. I mean, you've heard of the law of affirmations. You've heard of affirmations. If you write things down 10 times every single day, sometimes the universe has this weird way of making them happen. So the more negative self-talk that was going into my journal tended to get me in this, the wrong mindset when I was trading. So I went away from that. And something like this helps and keeps it really standardized, and it's very black and white. I can look at this right here and see, am I profitable? And it doesn't have anything to do with my emotions. It has everything to do with how I'm actually trading and performing. So I think that's a great way to do that. Okay, let's see here. Any other questions coming in? Sounds good. Yes, yes, yes. Okay, so a couple of questions came in on some instruments. So let's take a look. I have gold and silver. Again, feel free to type that in if you would like. I don't know what that little green line is there, but let me change the symbol. We're going to go to XAU USD. That is gold. Okay, and let's take a look on the weekly chart. So, and if everyone's tuned in, will you let me know? Let me know if you can see this. I'm switching over to gold right now. Okay, easy, Chief. All right, so we've got gold. Let me actually open this back up. Let me throw out a new workspace here. Yeah, we'll keep it there. I don't want anyone's. If your eyes are gravitating towards this, I'm gonna get rid of that little center line. That's all I was concerned with. Okay, so we have this big run from 2008, the bottom here of our financial crisis, 2008 to all the way up into 2011. Huge, ridiculous run in gold with a ton of support right in here. Okay, now, recently, a huge level that was broken is 1365 right there. 1365. So I think that right now, as we went into the holidays of 2019, we had a holiday drift up to 1600, but you notice that we are failing to break those highs. Okay, we're failing to break those highs, and this is my thoughts. I think that after this little run, this little correction right here, that if we are going to continue to fail or struggle to break these highs, I think we're going to see a top. Okay, I think that this high in price and this high in price is disagreeing with the overall momentum on a higher time frame. So I have a feeling that gold will stay sideways up here and eventually start to break its way back down. Now remember, 1365 is major resistance that is now likely to become future support. So if there are any sellers out there in gold, your risk is actually pretty nicely defined by looking for sell confirmation a bit lower and putting your stop loss just above that 1610 and going after this previous low or that 1365. So this would basically be easier to draw with an arrow. If we get sell confirmation, we're looking to stay bearish towards 1365. Okay, but I think once we hit 1365, that to me looks like a really great spot to also be bullish. Okay, a lot of trend line support right in here. I would like to see if not only can we get this to fall a little bit lower, but in this zone between the trend line and this previous resistance, that becomes a bouncing point. And that allows this to go much, much higher. Okay, so that's what I'd like to see happen. But I think because of the larger technicals with this high and this high, coming back into higher highs in price, lower highs in momentum, I think that technically gold will start to retreat a little bit. That would make sense because also the dollar is still resilient and the dollar is still strong. So if we're going to fall a little bit in gold, that's around the 1450 to 1400 zone. 1365 to me would be a great bottoming zone. And from there, I am looking for this area to give us some long-term on gold. I like gold long-term if we can buy it low enough. I like silver long-term if we can buy it low enough. And so to go a little bit faster on silver, I'm looking at the same thing. Silver has this great support around $13.50 or $14 even right in here. All these really nice lows, that's $13.95 and $14.25. So we had a really nice run. I was surprised that silver did not get back to this high, which is just above $20. We made this really nice run to the upside. I've been long since $14, and I got long again over here around $15. So I've been long on silver ETFs and long on the actual paper. There's SLV, that's a paper ETF you can trade. So I've been long on that, and we had a nice little run towards 1958 on XAG. I thought we were going to get to 20, but we didn't. So we pulled back. Same thing. If this is a corrective phase, okay, high to low, lower high to lower low, maybe it just resets somewhere in here. Corrective phase, and then we look to go long back to 20. If it resets back to lows, then it's a range. Lots of resistance, lots of support. Hopefully lots of resistance. Maybe we have to jump off those lows again. But I'd say for the most part, we're range bound between $14 and $20 on silver. But as I want to buy. I want to buy low, and I'll take profit at the high. I'm not really interested in selling on margin with gold or silver. I like to just buy them low, and they're kind of investment pieces for me. Okay. Great questions. And I've got a couple. Oh, man, I got a lot of comments that I'm missing out on. So Tariq's here from Toronto. Oh, man, I'm sorry I missed out all these comments. Ron says, love the beard. Well, Ron, it's funny you say that. Chief said, hey, I look like a hobo. But Chief, you have to understand that my weekly Outlook video was me protesting everything on the coronavirus. And I said, look, until this thing turns, we get some Aussie strength and Swiss weakness, I'm growing out the beard. So it's been 1 week. So hopefully I'm taking some profit in the next few days, few weeks, and I'll be shaving no problem. But yeah, great question, Donna, on the gold and silver stuff. The future of the dollar. Look, I think the dollar is heading up towards those technical levels to the resistance point, so U.S. dollar index. And we can go a little bit longer. You guys want to stick around? You want to go for like another 5-10 minutes? We're having some fun, right? So here's dollar index. Okay, look, there's two major levels that I'm watching right here. We have these highs from last year in August and September, and we have this high from back in 2016. Okay, this is about as bullish as I really see the dollar getting. And I think this is a buildup. Okay, I think that this could be a buildup on the dollar to have an excellent double top, and then we start to fall. So I'm planning a dollar move that is bearish. I'm planning dollar weakness, but we have been forced to be extremely patient on this dollar. And if it comes up to this area before we fall, or it comes up to this area before we fall, technically there's still great spots to look for sell zones. So, am I forcing trades on the dollar right now? No. I mean, my exposure on the dollar right now is I am long Aussie dollar, I am long New Zealand dollar, and that's it against the dollar. I haven't done anything with pound. I haven't been scalping the pound or anything. Dollar CAD, we closed out positions at 3,300 or higher. I'm trying to think. Euro dollar, if we crash through 110, which we did, it's about 10, 20 pips lower than that. I think the euro will continue to bleed lower towards 109 or 10800. So there's some scalping opportunities on the euro dollar to the downside for right now. There's scalping opportunities on the pound dollar right now towards 2750. But again, that's more short term as the dollar continues to show this drift to the upside. But I think this is a build-up for a much bigger change of events. And maybe it's something that the Fed does in March. Maybe the Fed starts hinting at cutting rates again. We'll see. It's kind of, we've been, for the last couple of years, we've been very Fed dependent. With what they say, what they do, is where the market is taking all of its clues. Okay? All right, good questions there. One fun question was, how far the Wolverines go this year? So somebody that knows I'm in Michigan. I live here in Ann Arbor, so watching the football team, the basketball team. Look, the Big Ten has been basically beating each other up. We have a lot of split records in the Big Ten, and obviously this is totally off subject, but look, it's a new coach. It's a new offensive scheme. There's adjustments to players. We still have a young team. I don't know. I think that we might surprise ourselves, but the Big Ten is just beating each other up, and it's a different style of basketball than most. But I think that if we can get into the tournament, I think we can hold our own. I think we need to have a more go-to couple of shooters that can hit the outside shots. We have a great point guard. I love the fact we have a 7-footer. I wish we had a little bit more depth, but anything goes. I mean, for recruiting-wise, we've had good players, not great players, but we've gone very far, and a lot of that was coaching. That coach now coaches for the Cleveland Cavaliers. We have Juwan Howard, old school alumni of the Fab Five. I mean, I'm excited to have him. I just hope that we can gel and find some chemistry. So anyway, I hope we make it to the tournament. I mean, it'd be great to win the Big Ten championship, but it's deep. Maryland's good. Rutgers is surprisingly good. Ohio State's decent. Michigan State, solid. Minnesota's not terrible. It's like we have 6 or 7 teams. Indiana, Purdue, right? We have 6, 7, 8 teams that are all decent in the Big Ten. So anyway, but meanwhile, they're having terrible records because they're losing to each other. So anyway, there you go. Strider says the beard's kicking. Let's see here. Bunch of small positions on Euro, Swiss, Aussie, New Zealand. Yeah, well, look, I'm not going to wait till Aussie, New Zealand to hit 107. I mean, we've got a yearly pivot on Aussie, New Zealand at 104.90. Euro, Swiss, if we get to 110.50, it's not based on those two trades. But I will gladly buy a gold-plated razor if it comes to those two currency pairs because I'm going to make a lot of money when those hit my profit levels. So I'm excited about those as position trades, and I've said from the very beginning of this year that those will be big payouts. I know that Denise, one of our students in our trading room, was talking about it this week, that, look, those, if I can, I mean, for my accounts, if I can make, 10, 12, 15% on those two positions, which again is building small positions and accumulating, then once we get confirmation, we start adding. We can get more aggressive when price is showing it wants to go in your way. So those will be big profits. Meanwhile, we'll take our Euro Aussie for 100 pips. We'll take our Aussie CAD for a couple hundred pips. We'll take our Pound Aussie. Trades this week, right? We had a lot of Euro Aussie love, Pound Aussie, Dollar CAD. Aussie came back in a nice solid way this week, and Aussie stayed pretty firm for most of the day or most of the week. So good stuff. Anyway, Dimitri's asking, what driver am I using at the moment? Man, you guys know that I'm a sports guy and a golf guy, huh? I actually just bought a new driver, actually. I bought the TaylorMade Sim. Let me see if I can find... Oh, I was going to bring it up on the screen. I've been hitting it really solid. I've been in a couple simulator sessions. The numbers are solid. And, I just picked it up a couple weeks ago. So TaylorMade Sim's really solid. Good numbers. Hitting it pretty far. And now we need just that snow to go away so I can get out and see it. But saw some ball flight last week. But I like it. It's promising. And it's hot. That's a hot face. Okay. Any other questions? What else do we have? Any other trading related questions? Otherwise, I mean, look, if you're in my trading room or you're in, look, I can go all day. This is fun for me. I'm hoping you're enjoying this as well. Here's what you should do next time, right? Next time we have this Ask an Analyst session, here's what I want you to do. I want you to, number one, know that this is coming. We're going to try to do this regularly on Thursdays. So know that this is coming, but get those questions out there. Post those questions on our Facebook page. Get on our Market Traders website. Get on our Market Traders Facebook page. Post these questions ahead of time. We can have a lot of fun with these sessions. We can answer a lot of great questions, and we can also, keep you informed with what we are doing. For example, my trading room, Tyson's trading room, Gary's trading room, Chief's trading room, our instructions, our new courses. We have a lot of great stuff that's coming out. We have a lot of great stuff that traders are using and making a lot of profits on. So sessions like this are very informal. Sessions like this are a lot of fun. Sessions like this are very casual. So anyway, if there are no further questions, I'll give you about 30 seconds or so. But it's been kind of a informal 25 minutes, but it's been fun. We'll certainly do this again next week. I believe Gary Fickhart will be hosting next week. So get those questions prepared. Post them on our Facebook page. Just look up Market Traders Institute Facebook and pop right up and ask those questions, and we'll save those and we'll get those directed to this session next week. If you have anything personally for me, reach out to me. If you have account reps, success coaches, have them contact me, get in these sessions, get in our trading rooms. But we're in here every day, grinding out in the market just like all of you are. So we're doing the same thing. Every single day, we're trying to get better. Every single day, we're trying to make pips. Every single day, we're trying to be profitable. So I like to say, trade to be profitable, not perfect, and see it, protect it, collect it. So as we say there, watch for the posts each week. We'll be reaching out. This is your time to have some fun with us, get some, free exposure, and have us go through a couple of instruments and have some fun. Okay. Okay. One last question. This came from Adnan. One last question on the coronavirus. So again, we've talked about this a lot in my trading room. I know that it's weighing heavily on the markets, but very quickly, I think that if it starts to take its toll on the financial markets, I think that there will be a central bank intervention. I think for right now, as we're in a U.S. election year, I know the markets don't like uncertainty, okay? But I do think that China will start to keep things pretty tight. I think that the U.S. will start to support the global economy. And I think the Fed would be willing to possibly cut rates to make sure there's more liquidity in the world and there's more money fluctuating so that there's still a sense of risk, right? Like, it's okay. And I don't like it. I don't like the bubble. I don't like the cheap money that's just going everywhere with no end in sight. But the reality is, in an election year, I don't see a lot that's going to derail this trend for now. But again, we talk a lot about that in the trading room, but what we have to do right now is trade what we see. We have to stay in the present. We can forecast big trades like the Aussie New Zealand, the Euro Swiss. We can forecast big predictions like the dollar because we're going to get big movements here. But I think this is going to be a year of a lot of seasonal movement. Okay, we had, January thus far was pretty exciting start. Oh, actually, I should say a boring start to the year until the coronavirus started to pick up. And then it was like, oh man, nothing happens. Then what happens? Giant bottoming, really nice reversals. A lot of the gaps that were created from the coronavirus and the scares. Look at the stock market. The U.S. stock markets are at new highs again. They gapped consecutive days this week. They're at new highs. So the market is again showing its resiliency and its commitment to shrugging off pretty much anything that is bad news. And I think that's going to be the flavor right now. I don't think there's a lot that can permanently derail the market yet. So we trade it, we take advantage of it, know how that affects the currency market, know how it affects stocks, and you trade to be profitable. Okay? All right, traders, that's enough for me today. We're right at the half-hour mark. I'll let you go. Thanks a lot for being with me today. My name is Chris Pulver here for the Ask an Analyst segment with Market Traders Institute. If you have any questions, get those posted on our Facebook page. Thanks for being with us. We'll talk to you all very soon. Take care.